To tackle all the major events moving the markets, let's get right to the floor show. Joining me now, Hennion and Walsh Asset Management President and CIO Kevin Mahn. People think that private credit is one of these niche parts of the markets.
Yes.
However, when it starts to hit big companies, and whether this is fair doesn't matter, because perception at the moment is private credit bad, we need our money out. It starts to hit the Blackstones and the Apollos and the KKRs. That does become an issue. How closely is somebody like you watching it?
Very closely. And what's always concerned me the most about private markets, Liz, whether it's private credit or private equity, is liquidity. And liquidity doesn't matter until liquidity matters. And it matters most during periods of duress, like we're seeing right now. The more companies that throw up these gates creates more of a concern for other investors who are already quote unquote trapped in these types of investment vehicles and can't get their money out. So I'm going to continue to watch this going forward, but I think a lot of investors have learned their lesson from this round of investing in the private markets and likely will return to the public markets as a result.
What Boaz Weinstein is talking about when he says what's going to happen in the next month or the next quarter, March 31st, we find out what the redemption levels are for Blue Owl, and that means the percentage of people who want to get their money out.
Yep.
How disconcerting is that if it really jumps?
If it really jumps, it's going to be a sign that perhaps there's more cockroaches that are out there than just Blue Owl at this point in time, and we're going to find how widespread this problem is. So stay tuned for more. Okay,
let's talk about the broader market here and all the news with the war. The president just spoke. The market is on tenterhooks. We don't have huge gains or huge losses, but you can almost feel the jitters.
You can. And I think for the foreseeable future, markets are going to rely upon positive updates as it relates to oil and as it relates to the conflict in Iran. Until we hear a couple of reports of multiple tankers, non-Iranian tankers, passing successfully through the Strait of Hormuz, we're going to see more volatility, not only in oil markets, but in markets as a whole. Because the longer these oil prices stay elevated, it trickles into gas prices, which means that consumers have less to spend. When consumer spending goes down, the economy slows. That's not a good overall equation. That's not our base case right now, but the longer this lasts, the more of a drag it's going to have on the economy.
$91.34 for crude oil at the moment. Again, we're in the aftermarket, but these headlines are gyrating many different areas. So it's not a surprise to see volatility at, at 26.
No.
Which isn't certainly as high as what we saw yesterday in the early morning. Yesterday was a crazy session. But how do you as an investor identify great opportunities when we are being pulled in different directions?
Yeah, if I look at the headline risk right now, it's oil, it's Iran, it's how much further does this escalate. If I look beneath all of that, there's tremendous growth opportunities that still exist today.
Where?
If you follow the money. Look at the AI infrastructure trade. Look at the ARM's chip race, with ARM now entering it, in fact, similar to what NVIDIA has done. Who's the benefactor of both of those? Taiwan Semiconductor. Let's look at aerospace and defense companies, Liz. Obviously, that's at the forefront of every investor's mind right now, because we need to replace munitions, upgrade and modernize our defense capabilities. And then, of course, power, memory. I think of Micron Technology. I think of some of these utility companies. There are opportunities still out there.
I'm glad you brought up Taiwan Semi.
Sure.
My sources are telling me that this ARM chip, and for people who don't understand, ARM designs chips. Then they license those designs to the NVIDIAs and the Advanced Micros and just about everybody, who then build upon them and customize them. Now they're going into that business.
Yes.
That, I would imagine, is a little bit disconcerting to the Intels and the AMDs of the world who focus on the CPU part of this world.
Absolutely. More competition. But if I think who's the primary benefactor, again, it's Taiwan Semi, right? The largest dedicated chip foundry in the world with a 60% market share that's only going to increase now because of this new ARM relationship.
And it's hard to really tell where these companies are going. You would think that Intel would be down. Intel is actually up, while ARM, because they say it's going to add $100 billion to revenues eventually, this chip. ARM is down, so there's not a lot of sense to be made. But I think what you're saying is identify who benefits no matter what.
Correct. And think about Micron last week. They killed on earnings. They killed on revenues. They guided forward. Their stock was down.
Yes.
Sometimes this doesn't make any sense. I look at that as a buying opportunity as a portfolio manager. So I like Taiwan Semi. I like Micron. I even like in the infrastructure play, a company like Eaton or Vertiv on the cooling side. There are growth opportunities out there.
Micron down 2 1/3%, fourth day in a row down. You're saying buying opportunity?
I'm saying buying opportunity, absolutely, because the AI revolution will come to a screeching halt without power and memory. If you think memory, you think Micron.
He's the Mahn.